Good morning, Top Step family, Futures family. It's time for the market prep. Thursday, June the 22nd. Already, days are starting to get shorter. Yes, yesterday was the first day of summer, and we're heading the other direction now. But let's enjoy the summer while we can, huh? And let's also enjoy these markets. My name is John Hoagland. Thanks for trusting me with your time. As always, our focus here on the market prep is seeking accurate context in the markets, always thinking about risk management and remaining patient. We had some economic numbers come out this morning. The jobless claims came out a little bit higher than expected. 264,000 initial jobless claims. They were looking for 260. The last release was 262, but they've raised that up to 264,000. Continuing jobless claims were a little bit lower than expected. They were looking for 1,782,000. That came out 1,759,000. So a little fewer continuing jobless claims, but initial jobless claims continues to kind of drag along the ceiling here. We also had the Chicago Fed. They were looking for 0, came out minus 0.15. Whatever that means to the markets, we'll find out. At 9 o'clock, we have existing home sales. Powell will be starting his Senate testimony at 9 o'clock. We also have another talking Fed in the form of Loretta Meester speaking at 9 o'clock. And we also have leading indicators, which on the trading floor we used to call misleading indicators. 9:30, the natural gas number coming out, and 10 o'clock because of the holiday on Monday. The EIA petroleum status report is due out, and that's again at 10 o'clock this morning. Well, we've got stock index futures looking to start the day lower, led by tech stocks, as Powell has kind of struck a hawkish tone yesterday in the House, and more of that is expected today. His speech will, of course, be pretty much exactly the same as it was in the House. This is when the question and answers come into play, when things can get a little bit dicey. So we'll be trying to keep an eye on those things. The Bank of England raised rates today by 50 basis points. They were looking for a quarter of a point. They raised it a half a point to 5%. Yeah, that 25 basis points was not enough, apparently. They went to a full half a point increase in rates. At least that's what I'm seeing. Crude prices remain range-bound on demand questions after the IPA announced a deeper than expected drop of 1.25 million barrels yesterday. Not a huge number. The EIA expectations are mostly the opposite, expecting an increase of 1.87 million barrels in inventory here in the U.S. We'll find out soon enough. What's it going to mean in the markets? Always seems like whatever the fundamental says in crude oil, it goes the opposite direction, but it's still quite range bound. We had expiration yesterday, I believe, and well, we're going to take a look at that on the charts here very shortly. VIX this morning is up a little bit, but still very low, 13.81. It was 13.78 yesterday. No major changes there, at least not yet. The dollar index about flat this morning, 102.07 when it was 102.65 yesterday. Again, no major changes overnight. And the yield on the 10-year, just about exactly as it was yesterday, a little bit lower. It's 3.73% this morning, 3.76% yesterday, and the yield, of course, staying very steady, as are the prices of the treasuries of late. Again, we'll see that in the charts here very shortly. Make sure to hit the lucky like button, share, comment, question, feedback, heckling, and love are always welcome here on the Market Prep. Subscribe to our YouTube channel so you get notified when we do go live. Speaking of going live, today after the prep, we've got Make Hoag Money. I've put the link to get into the Zoom meeting. You can also watch it on YouTube. And we're going to see if we can't find a way to make me some money today. So we look forward to seeing everybody and spending a little time talking trading. It's one of the things I love about what I do is I get the opportunity to sit down, chat, and talk trading, and it's going to get better. We're talking about starting Top Step TV next Monday, but it looks like it's now going to be July 5th, and there are going to be some really cool things coming out beginning of July. I think you're all going to be very excited, and I'm very excited because we're going to have the opportunity to spend a lot more time together. All right. So who do we have here? We have my friend Josiah from Florida, first in the room. Josiah, you win the prize this morning. Shaw, good morning to you. Theo, George, Caprice, the rooster, crowing early this morning. Lacey says good morning to everybody as well. Jason, I got two Jasons, one right after the other here. That's kind of cool. Matthew, Scott, Sawney, Concord. My brother Tom is with us this morning. Good to see you, buddy. I love you, and I miss you. Dan Trader, Steve, good to see you this morning. Denise, Will, Bill, Alejandro, Steven, JD Royalty. It's good to see you, JD. I don't know that I've seen you in a little while. It's good to have you here. John Hukel, NASDAQ, Dr. VJ, Anise is here with us. Good morning. My spirit animal, Rusty Golfer, is with us here this morning. DA, Trading Research, Charles March, Sarah Hall, prayers and love as always. Yes, Tom likes that snappy music score. Well, I will certainly let them know. JD, time to eat. Put your hands up in the air. You guys like that music, don't you? We're all dancing. That music ruffles my feathers in a good way. That's good. It's get you pumped up, ready for the trading day. The summer was good while it lasted. Here comes fall. No, not yet. Please, Dan Trader. James, good to see you. Phil, howdy. It's good to see you. Rooster, Vince, good to see you this morning. Kaylee, Travis, good to see you. 90-bit even, 90-bit even, 90-bit even, 90-bit even. Fred, good morning. Nothing better than more time with Hogan. Miss Lacey, thank you very much. That's going to be hopefully a lot of fun and educational and helpful for everyone. We have some pretty cool things coming. Joe, good morning. My biggest challenge, the lizard brain. The lizard brain, always an issue. Always an issue. Dan, maybe I'll do that one of these days. We'll do a kind of a solo guitar piece for the open for the prep, and we'll see how that goes. Good morning, Henry G. And all right, we're going to jump into the charts pretty quickly here this morning because we do have Make Hogue Money. This is the daily in the S&Ps. So the bull flag is pretty much holding structure as a bull flag would. It's small ranges. Volume has been pretty low. Yesterday, it was pretty low on the New York Stock Exchange as well, 3.7 billion shares traded. No change in open interest. This was what we were talking about yesterday in the late Make Hogue Money yesterday was what did we think for today? And one of the things that I'm thinking is that this downward move is not performing well as an auction process. It's one time framing lower, and it's, I'm not looking to try and pick anything here. It's just not performing well. Volume has been low on this pullback. We also know that we had very little change in open interest. On the preliminary, it says we lost approximately 100 contracts on this push to the downside yesterday. That is going to be a little bit confusing because we had such deep negative delta. There were so many aggressive sellers here yesterday that just didn't change open interest. So was somebody scooping up what everybody was selling? It's the way it looks to me. So the bull flag possibly is intact. Again, lower volume. Open interest has been, hollow yesterday for sure, and narrow ranges. Here's what it looks like on the 30-minute chart. So there's our high. This was Friday, Monday, Tuesday, Wednesday. We got a real good look at this trend line at near the end of the day yesterday. And, I think I was trying to anticipate a breakout of it. And look at how negative the delta has become even in the overnight, negative 27,000 since the open yesterday. We're seeing aggressive selling here. Is it performing well? It's not increasing volume, and it's not bringing in open interest. So this move to the downside remains to be seeming a little bit hollow. We have to remember short time frame structure is to the downside. So what I'm going to be kind of looking at today, and I think this is probably one of my primary hypothesis today, is we're going to fade the extremes of this channel that we're currently in unless there's a breakout to the upside. If there's a breakout to the upside, and this has to be a relatively substantial participation in volume, time, momentum, any of those things to accept above this trend line, and we're going to go with it. A break of a structure like this is something you want to go with. It's similar to balance to breakout rules. This is a degree of descending balance. And if we do get a breakout and see some meaningful participation above this trend line, because now we've got 1, 2, 3 touch points, we're going to have to go with it. But in the meantime, if we do get up to this trend line, it offers the opportunity for an execution in either direction, and it also offers the opportunity to limit risk. Well, overnight, we've got some short inventory here. We're going to be probably opening with a gap if we were to be opening right now. So there is another nuance. One nuance, balance to breakout rules. Nuance number 2, overnight inventory short and opening with a gap. So then there's gap rules as well. If we don't close the gap relatively early, we're going to be looking for continuation to the downside, which would go with the short time frame structure that we've been establishing. But remember, you got to be thinking, what is this market attempting to do? It's attempting to go lower. Is it doing a good job? I don't see it. I don't see it as doing a good job. Value is moving lower. We've got price moving lower, value moving lower, lower highs, lower lows. There's, nothing that says that this can't continue in this direction other than the fact that the auction isn't performing well. In other words, it's not bringing volume. It's not bringing open interest. Anything, of course, can happen, especially when we have Powell speaking today. We have Meester speaking today. We got a couple other economic numbers due out here, existing home sales and misleading indicators. But we're going to trade what we see. My main hypothesis is trade range bound or breakout strategies, and early in the session, watch and see if we can't close the gap early. We'll look for continuation to the downside. There seems to be a whole lot of shorts, shorter time frame shorts in this market because of that deep negative delta that occurred yesterday. That's not typically how the longer time frame operates. That's how the shorter time frame operates. We use market orders to either hit the bid or lift the offer when we're trying to get into a position. Seems most of the time as retail traders do. All right, so here's the TPO chart from yesterday. Neither the IB high or low remained the high. There were only 4 of our markets today that did that, so a little over 50%, but still our average is right around 70% of the time. One extreme of the regular trading hour is one extreme of the initial balance. We're going to continue to collect that information, and when it becomes statistically significant, that's sometimes very difficult to say this early in the morning, we're going to let you know how that goes. All right. So what did we do yesterday? Well, we looked lower. We don't have a very strong excess low, although it is an excess low. We have an excess high. The market traded up to that trend line and then fell apart, closed near the low. It's a normal variation, neutral day. Here's where we're trading now. We're opening with a gap. So if we open with a gap and we can't close the gap, there is plenty of potential repair down here in this profile. Our next naked point of control, TPO-wise, would be 43.62 or 61 and change, whatever it is. But there's a couple of anomalies that were left unchecked in this profile that makes me a little bit concerned. If that is what traders are targeting, we could see a decent move to the downside. And I don't think that changes too much of where we would be today if we were to get to these levels. We're still inside our channel. We've got last week's low here, I think. We've got a naked point of control, two of them very close together here. It might be an interesting opportunity for us to see this market continue to the downside, to look for better trade locations if we're going to be starting to look for longs at any time. So here's the TPO chart again. Oh, this is the composite for the September contract. It doesn't go back too far. It goes back to the beginning of June, I believe. But we can see for sure that we've got a concentration of time and volume here, low volume here, and a concentration of volume here. This area here might be kind of sticky for us to get through. It's low volume, very little time there. May end up being somewhat supportive, and you can see that the overnight low kind of takes us close to it, but not really in it. And I guess we're really in it, but you have to see what happens here. All right, let's take a look at crude oil, which has just opened up a few minutes ago. This market is very range bound. It did add 4,900 in open interest yesterday on this push to the upside. It makes me think we've trapped some shorter time frame longs here, and those shorter time frame longs are getting hurt right now. Open interest, again, indicates, because we're so range bound, that it may have trapped some longs, as prices has returned to central location in the range. Volume was low yesterday. Again, we did add 4,900, but they're not getting what they're looking for today if those were longs. And of course, we are waiting for the EIA numbers to come out here at 10 o'clock today. What do we have as far as overnight inventory? Well, we're pretty short, looking like we've kind of left the opening range at the high of the day, and we've left a gap. So this is going to be an important level for us to pay attention to throughout the day today. We stopped short of closing the gap, or that's what it looks like. We'll see that better on the TPO charts. We've tested to this TPO here. Now we got a long way to go before we're going to find any weak structure down below here. Take a look here at the TPO chart. So no, we did not close the gap, looking like we've left the opening range at the high of the day. If that's the case and we can't close this gap, we don't take out the high of the opening range, I'll be looking for shorts today. That can change in a heartbeat, of course. As we all know, anything can happen. Anything will happen. So really, I'm just trying to see if I can get an execution back up here near the high of the opening range, near the high of the initial balance, and to see if we can't close the gap. If we close the gap when we start to show acceptance inside the range from yesterday, that could, by all means, bring a value area special situation play. But that's not going to happen until we accept back inside value, which is all the way up here. I think the fact that we have not been able to close this gap as close as it was is important information. As long as this gap remains, I'll be, I think, looking for opportunities to sell strength until we close that gap. Here's the NASDAQ. Now, the NASDAQ is, of course, always a different situation than the S&Ps. Yes, they're very similar assets, but they have very different stories. Now, the NASDAQ story is a little bit different than yesterday, or than the S&Ps. Number one, we're a lot closer to potentially breaking upside market state with the fact that we're this close to the weekly kickoff low, which is, I'm gonna get all my notes out here, 14,950. We got within 20 points of it here this morning so far. What about the auction process? Well, the auction process to the downside here yesterday was a much better performance than in the S&Ps. The volume actually increased We added 3,500 in open interest. That's telling us that there's business coming in on the short side. Here's the 30-minute chart. Where did it take us to? Well, here's our channel for our bull flag. It took us to it, rejected it. We've got a little bit of overnight inventory to the short side. We may or may not open with a gap. This area here looks extremely interesting to me. Again, I'm going to be using range bound to breakout rules. If we find support down here, it'll be a pretty decent opportunity for us to limit risk and perhaps see a move back to the upper end of our bull flag. And it would be great to get long down here somewhere, hold it all the way to here, have it break out, leverage into that position, and get us all the way up to the candle, to the flag stick high, which would take us all the way up here. I don't see that happening, but we can dream. So again, the rules, I'm looking at this area down here as a very important area for an execution. Range bound to breakout rules, again, applying. Here's the TPO chart from yesterday. So we had a B-shaped profile, which was not supported by a loss in open interest. It wasn't long liquidation that pushed the market down yesterday. It was new selling. Look at our overnight low. Looks very interesting even on this. We have a low here, we have a low here, we have a high here. This looks again like an interesting situation here. So I'm going to be very, cool thinking about that weekly kickoff low, that trend line, that short time frame trend line. And, just remember that the performance of the NASDAQ was better yesterday than the S&Ps. Relatively, kind of a smaller range. Volume did increase, open interest increased. There was interest in getting short this market. Is that a good thing for shorts? Well, we've got to break out below weekly kickoff low, which is again right about here, 14,950. What about gold? What is gold doing here? So since we've put in the high, we're putting in lower highs and lower lows. The dollar has come off its recent highs. As a matter of fact, today it's almost down to 102 when it was up near 105 last week. That's not doing anything to help gold. Wonder why? So yesterday it stuck a toe below the weekly kickoff low and really tried to reject it. There was a loss of 900 in open interest, so it's difficult to see where money is coming in or coming out of this market. Volume wasn't that great yesterday. All right, so it needs new business to continue this move to the downside below weekly kickoff low. So far, well, maybe now we've extended the range below yesterday, but what it was an inside extended trading hour range. Take a look at the 30-minute chart. Overnight inventory is short. Yesterday's low, a lot of rejection down there. It's going to be interesting to see how this market treats this down here. Again, a lot of overnight lows. We did not open with a gap. We opened below value, seem to be rejecting value. Here's the TPO chart. Okay, IB low. Nope, neither side. P-shaped profile, indicating possible short covering, which is supported here by a small loss in open interest. Yesterday's low looks kind of interesting, but as we spend time and participate below weekly kickoff low here, I think the odds are greater that this market could continue to the downside. We need to see some new business again come in. New business. We're going to have to see a big jump in open interest tomorrow if we're going to believe any continuation moves to the downside. Here's the euro. Now, Bank of England raised rates today. Yesterday, boy, that was a really good breakout of a bull flag. We're going to see that in this chart here very shortly. What a nice clean move that was. So yesterday, the euro expired. We lost 129,000 in open interest, but in the front month, we added 4,300. Volume wasn't all that impressive, but the fact that we added all these longs is healthy for the upside continuation of the bull flag. We're getting a pullback now, quite possibly, of course, because of the Bank of England. And here we are. So there's our bull flag breakout continuation, closing at the high. Overnight inventory really not present. We're starting to see some pressure coming back into value. This could just be a repair move. It could come down to point of control. Could come down all the way to this high volume node here before finding buyers. So I'm not going to be fighting this downside move. I'm going to wait to see if we can find some structure within the area of value from yesterday before looking for any kind of longs. Here's the TPO chart, IB low. Now, it's kind of a double distribution trend day. It is very toothy, and there are a lot of anomalies. There are a lot of things that don't fit in this profile. It's a kind of a poor high, kind of a weak high, kind of an excess low, not a big excess low, but these single TPOs here will present as excess. These TPOs will also present as excess below price, but it's not doing a very good job of continuation here, is it? This move, while it seemed good, seemed solid, wasn't all that confident because it left all these anomalies, and these anomalies are going to be visual targets for a move in the opposite direction. So I don't want to fight this move to the downside. I'm going to look for some sort of structure based on structure from yesterday's profile before looking for opportunities for any kind of longs. And again, we can come all the way back down to this trend line, which was our resistance, our breakout point, and a potential support level on a continuation move to the upside. All right. Here's the 10 years. Balance. That's really all I can say about this market. Volume and open interest yesterday were just okay, not exciting. Open interest, we added 1,600. No big deal. Still very centrally located inside of last week's high and low and our weekly kickoff high and low. This market remains to seem to be in short time frame control. So we're going to be looking for short time frame levels with which to look for opportunities. And it looks like, we've had some gyrations here. I mean, this is a kind of a balance area here. It's a symmetrical triangle. Here, let me fix this. Symmetrical triangle. And it's looked above and it's looking below. If there's meaningful participation down below here, we could easily see this market move back to last week's low. So I'm looking at this as kind of, again, balance to breakout. If this is a significant breakout, don't fight it. Don't fight it. Here's the TPO chart from yesterday. Balance. Horizontally, it looks like this market is still largely in balance. With those trend lines on there, it looks like it could potentially break out. And again, we need meaningful participation below that level for continuation. Take a look here at the natural gas. I still have it I still have a little bit more volume in the July contract than the August contract. Tomorrow, we will most certainly be trading the August contract, but this is still the July contract. What we've done here is we've set up an area of balance. Rollover has a tendency to do that. We lost 9,400 in open interest yesterday, and that's an estimate, and that's, again, blurry because of rollover. You see the volume falling off in the July contract. It's also difficult to read. Overnight inventory, flat-ish. No overnight inventory to really think about. We've got market opened inside range, inside value. It's attempting to reject value and range from yesterday to the upside, but there's still lots of work to do on either side of this market. With no overnight inventory and opening in range and in value and attempting to reject it, I have a tendency to try and be patient, look for better trade locations as the day goes on. Here's the TPO chart. So a trend day to the upside. It did not create, well, yeah, I guess it did create a late spike here. Some was 205.97, so that's all the way up here. The base of the late spike, 205.84. We've opened in or above the base of the late spike. So I'm thinking that that is suggesting that the market is accepting higher pricing. Look at the recent high here. It's a very weak high. We have excess on the lows. Excess on the lows. So if we can't accept inside the TPO value area here in this natural gas, I'm going to be looking for this market to continue to push higher, maybe take out this weak high. It's already saying with the open in or above the late spike that it's likely to accept higher pricing. Anything can happen. Never saying it's easy, but you know, these late spikes are some of my favorite opportunities. All right. Don. Yeah, it is kind of casual Thursday. I got this shirt when I was in Florida, and I kind of like it. I thought I'd wear it. I haven't shaved yet. I'll be looking much more, I guess, professional on Monday. But we're here to check out these markets. Net null profit. Weekly kickoff levels, just money high and lows. They are levels that I believe the market is likely to force longer time frame traders to adjust inventory. I think our closest proximity to that would be in the NASDAQ. So this weekly kickoff low is an important level that I calculate on Fridays usually, using technical analysis, measurements, math, profile information, tea leaves, and chicken bones. Not so much chicken bones anymore because I know the rooster doesn't like that, but they're not meant to envelop a range. They're meant to alert me to the idea that I better be looking out for longer time frame traders at those levels. All right. All right, so let's take our deep breath. Stay humble, grateful, creative, and centered in your trading today. I look forward to seeing you all and Make Hogue Money, and let's see what we can do. We'll have a little fun, talk a little markets, and we'll see what's happening. Don't forget to be kind to yourself and others. Say a prayer for world peace, and I'll see you in just a few minutes. If I don't see you, have a great day.